Third-party insurance administration service provider MediAssist surges as it announces the acquisition of Paramount TPA for an enterprise value of 312 crore rupees. Brokerage Investec is also bullish on the stock.
NIIT surges 15% today. It's up close to 50% in 3 sessions. The promoters hike stake and noted investor Mr. Ramesh Samani picked up 8 lakh shares in Friday's session.
Block deals continue on Dalal Street. Tata Tech opened with losses but recovered from the lows of the day after 3.3% equity changed hands at around 1,027 a share. Rolex Rings, on the other hand, has also rallied after a block deal saw 2% equity change hands.
And Bondada Engineering is up close to 5% circuit, with the company winning an order worth around 576 crore rupees. Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me is Hormoz Fatakia. Well, Hormoz, that's sort of for day. Well, we have some bit of consolidation, which I think is par for the course.
Indeed, and that's what the market has been doing, right? We're continuing to trade close to those record high levels for the Nifty as well, trading with almost at the flat line actually. Now 25,000 on the index, 25,078 continues to remain that level that we need to watch out for on the upside. The Nifty Bank also doing precious little at the moment, continuing to trade with minor losses of close to around 80 points. But it is a pharma index that is leading the gains in today's session, 0.8% higher. The broader markets are doing well. They were sluggish in yesterday's trade. The small cap index is up 0.6%. The mid cap index also trading with gains of around 0.3%. So nothing much to complain, I guess. But yeah, consolidation is the word.
Well, that's right. Well, let's focus on the primary markets then. Solar cell manufacturer Premier Energies, 2,830 crore rupee IPO has opened for subscription today. The IPO will close on August 29th. Well, the first guest on our show is Mr. Chiranjeev Singh Saluja, the managing director of the company. Hi, sir. Good morning. Welcome to the studio and welcome to the markets. You know, you've been running this business for a while, but now you're going to be listed, so we'll be interacting more often as well. Give us a broad sense, a few numbers if you could, in line with what the regulations are. What's the current order book and the potential order inflow that you're looking at for this year?
So the order book, Nigel, is about 5,900 crores. What we have, it's a kind of a robust, strong order book, which we have. This is going to be a realization cycle of 18 months. Okay. The order has to be executed in. And in terms of the demand which we are seeing in India and in the US market, it's very strong. And that's the reason for the expansion. The primary raise, what we are doing is a 1,291 crore raise. Out of that, about 1,000 crores is going into our greenfield expansion. That's a 4 gigawatt solar cell and module line, which we are setting up in Hyderabad. So with this capacity expansion, we would increase our present capacity, which is 2 gigawatt cells, to about a 7 gigawatt of cells, and from 4 gigawatt of modules to 8 gigawatt of modules.
Indeed. Mr. Saluja, first of all, welcome and congratulations on the IPO as well. And I had to ask you, so you mentioned that you're going greenfield expansion in Hyderabad and all of your 4 facilities, if I'm correct, are located in Telangana, in that state itself. Do you plan on expanding beyond that state, or does regional concentration act as a concern as well?
So we have plans for backward integration, and we have signed an MOU with a Taiwanese company with whom we are setting up an ingot and wafer facility, which is a backward integration of solar cell. And this facility, we're looking at moving out of Hyderabad. We are looking at various zones across India where we could set up this new facility. And on geographic expansion, we are also setting up a facility in the US. There again, we have tied up with a large module manufacturer based out of US, having a 20 years of experience in module manufacturing in America. We will be setting up in a JV, a solar cell facility with them. That's where our expertise comes in.
Is there a geography that you have zeroed in on India as to where you want to expand beyond Hyderabad?
We have still not finalized. We have shortlisted about 3 locations, but we are still discussing.
All right. Mr. Saluja, last year you did around 3,100 crores of revenues around about. Now, going by the expansion that you're talking about, what is the optimal revenue potential that you can do?
So we are growing at a CAGR of about 100% year on year. That's because our capacities are doubling in 21 to 23. We almost doubled, and now 23 to going to 26 will be doubling. So we are looking at capacities doubling, and hence even the revenues because of the increase in the operational capacity.
So post this expansion, the revenue potential of the company will be roughly around 6,500 to 7,000 crores. That's the potential. We're not asking for a guidance.
Yes.
Got it. Also, how's your balance sheet looking?
So today we have seen a great turnaround in the company, because 21-22 was the year when we had just set up our large-scale cell plant. It takes about 2.5 years to set up a cell plant and about 6 to 8 months to even stabilize these lines because of the complexity of the chemicals and gases what you use. And with the lines getting operational, we have seen a significant growth in our EBITDA margins starting January 24. Our last year was good. Q1 performance also is demonstrated in the RHP, which shows a significant growth.
You know, Mr. Saluja, for this quarter that ended in June, almost 80% of your top line came from your top 10 customers. Do you plan on bringing that number down? And also, are there more customers in the pipeline that you plan to bring on board?
So our business is such that, you have customers who are setting up power plants, and these power plants have a certain COD when they need to commission. So our concentration of the number of customers will remain around this, but every quarter the type of customer changes. Right. So depending on when their plant commissioning dates are. So it's 10 customers, but then it changes every quarter.
So you don't see it as a concentration risk?
It's not a concentration risk at all.
All right. Just getting back to the point that you were making with regard to the profitability as well, we're not asking for a guidance, but sometimes ahead of an IPO, suddenly the margins look good. And for you as well, you're moved into the mid-teens from single digits. Do you think this sort of a margin profile is sustainable?
So again, my answer to this question is that the solar cell lines, they've got stabilized, and you see the change in the margins in the last 8 to 9 months.
Yes.
And this is not because of any big change, except that the lines have got stabilized. So we feel that this will continue.
Got it. And I didn't get the point about how's your balance sheet looking. What's it? Do you have cash, debt in the books? What is it?
So we've got 1,398 crores of gross debt. As of now, our net debt is about 980 crores. We will be taking a new debt of about 2,200 crores for this expansion, which we are doing. That's a 3,400 crore project, which is a 4 gigawatt cell and module. About 1,000 is coming from the primary and rest is debt from IREDA, which is the Indian Renewable Energy Development Agency. So on total, we are looking at our debt a peak debt going to about 4,000 crores by FY27.
And what is the borrowing cost of that?
So IREDA is very supportive in promoting manufacturing in India and also development. They've got very competitive rates, so it's about 9.25% is what they lend at.
And that's a peak debt level, right? 4,000 crores.
Yes.
Do you see those margin levels, though, to be sustainable, Mr. Saluja? Because in the mid-teens, there's been substantial growth in margins from 22, 23, even in this quarter as well. Do you see those levels sustained?
So we feel that there is a very, very strong demand. The demand is surpassing the supply. So our guidance is, yes, they will be sustainable, need not be as what they are today. But on a guidance basis, yes, these are here to stay. Solar industry story is coming now. It's growing aggressively. You're seeing the kind of capacity coming in. So I think this is the era for the solar industry boom to happen in India, which is really good for us because the cheapest source of energy is clean energy, and we need to have a total manufacturing supply chain in India.
All right, Mr. Saluja, final question before we let you go then. What about the competitive intensity? In the space like yours, there's always that fear that a couple of large conglomerates here in India, could be competing with you, which in turn could put pressure on the business. Clarify on that. And this Chinese problem, are they a competition as well?
So I'll answer your first question. Yes, competition will catch up. We are happy that the industry is growing, especially because we have been in this industry for 29 years. This was started by our chairman, Sri Surendrapal Singh Saluja, who thought at that time he had the vision that solar is going to play a very important role in the energy mix. So look at us as a company which has been in this for 30 years now, 3 decades. And we have seen all the cycles of this industry. So we are happy that the competition comes in. We are happy that the ancillary grows and the whole industry space becomes much stronger in India. In terms of China, China prices and China aggressively selling is a great advantage to India. It's not a threat. Cheap Chinese prices only means that we get solar cells into India from China and offer, very competitively priced modules to Indian developers. So that Indian developers who are setting up large power plants, that market also is aggressively growing now because of softening in prices.
Now, one final question from my end, sir. I had to ask you about the utilization. What's the current utilization at your facilities? And you've also spoken about underutilization in your RHP as well, which is what I want to highlight about. Was this underutilization the utilization levels going to increase as more capacity gets added on?
So if you look at our DRHP and then the RHP, you've already seen an increase. When you set up these cell lines, the utilization is around 50-60%. Today, we are already at 80%. The peak where we can reach is about 92% on utilization.
All right, Mr. Saluja, wish you very good luck for your IPO. Thank you so much for joining in and wish to speak to you again on your listing day as well.
Thank you.
That was the management of Premier Energies, then the IPO opening for subscription today. and as of course, it's a fresh issue as well as a combination of an offer for sale. Take a short break, come up with more corporate conversations on the other side. Stay tuned. We'll be right back. Welcome back to Chartbusters. Continuing with our corporate conversations, then India Ratings recently upgraded J&K Bank's long-term issuer ratings, and to discuss the impact this could have on the bank and to understand the outlook on the business going ahead, we are being joined by Baldev Prakash, the Managing Director and CEO at J&K Bank. Mr. Prakash, good morning. Thank you so much for joining in. I'd like to start off first by asking you, sir, about this conundrum about that banks are facing with regards to the deposit growth. How has business been in this quarter so far? We are 2 months into quarter 2. How has business look like when it comes to the loan growth as well as the deposits?
Yeah, good morning, Mangalam. So as far as deposit is concerned, first quarter was a little challenge for us, but after 30th of June or 1st of July, we are seeing some deposit accretion, and we have to make little more efforts, which we have already started. Advances growth is in line with our guidance, and we are confident to meet the guidance.
Okay, all right. Hi, Mr. Prakash. This is Nigel on this side. So what would that guidance be? I recall earlier you were guiding for NIMs in that vicinity of around 3.75 to around 4%. What's the outlook on NIMs, loan growth? Let's get these numbers out of the way.
So, Nigel, our story on NIM is intact, actually. 3.75 to 3.85 we have guided. And first quarter, we ended at 3.86. And obviously, given the strength in our CASA, as well as the retail business, which is picking up in our core territory, we are confident to maintain the NIM within our guidance.
Okay. And what about loan growth? I missed that number.
Loan growth overall, mid-teens, we have guided around 15%. And first quarter has been little slower, but this quarter it has picked up, and we will be meeting the guidance.
Any pain that you are seeing in the retail, the unsecured retail side of things, Mr. Prakash, when it comes to your bank?
No, Mangalam, so far so good. And in fact, the retail story is opening up in our core territory, J&K and Ladakh. And this is mainly driven by the ecosystem of tourism. So retail, we don't have much problems. Even agriculture is also picking up good here.
Okay, all right. Mr. Prakash, that's Hormuz, and this is Nigel here. So, I just thought I'll get that out of the way. Hormuz is stepping in today for the show. Mr. Prakash, give us a few more details. As a percentage of your total mix, how much is unsecured of your book?
So, unsecured will be around 25%.
Okay, and you're saying there are no signs of stress as of now, according to you?
No signs of stress as of now.
All right. Now, what is your current restructured book and how much of it do you think can slip?
So, Nigel, our restructured book is around 1,000 crore left now. And you must be seeing it for the last 1 year and so. There's hardly any further slippages out of the restructured book. Whatever is being upgraded, that is being reduced from the restructured book. So, whatever was stressed already slipped. No further slippages are expected out of the restructured book now.
What about overall slippages, Mr. Prakash? What's your outlook on that for FY25, the overall slippages, the credit cost, as well as the asset quality picture going into FY25, particularly because you mentioned that you are currently not seeing any stress in your business whatsoever?
So first quarter, if you have seen our overall slippages, hardly any slippages actually. We have been able to control it very effectively. And going forward also, our credit cost has been very benign, below, in the minus only. And given the type of portfolio we have in the form of already technical written off accounts, so we are expecting good amount of recovery. Because of that, our credit cost is likely to be benign only going forward.
All right, Mr. Prakash, in the region that you operate in the valley, what is your market share, and are you growing faster than the peers, or do you think competition is getting intensive out there? And also, there are some fresh bouts of terrorism. Is it impacting the business?
So, Nigel, our market share has been in the overall business in above 60%. And for the last few years, we have been able to maintain it, though some competition is being faced in the liabilities front, in the liability side, so which we have to tackle it more effectively. And the recent terrorist incidents have happened mainly in the Jammu division area, basically Riyasi and Doda side. So there, though our branches are there, but we don't find much impact on the business of these incidents.
Mr. Prakash, have you received any recommendation from the Reserve Bank of India to bring down the stake of the state of Jammu and Kashmir in the bank?
We have not received any recommendations from Reserve Bank of India. And as soon as we get it, obviously we have to discuss with our majority shareholder, the government of J&K, and we will let you know whatever outcome is there.
Okay, all right. So as of now, you've not received that directive, but that could possibly come. Maybe that's what the street is speculating on. We'll touch base with you at that point of time. Final question before we let you go. Give us a number, right? The gross NPAs, net NPAs, and credit cost. I recall, you were guiding for lower numbers going ahead. So just fill us in with all those three.
So our guidance for gross NPA has been 3.5%. We are already at 3.90 now. And definitely by the year end, we will be 3.5 below, even better than that. And as far as credit cost is concerned, we have already advised in our investor call also that credit cost, because of the technical right of recoveries, write backs, we are expecting it to be benign for the whole year.
All right, Mr. Prakash, thanks a lot for joining in, sharing with us your views on the road ahead for the bank for FY25. That was the management of J&K Bank. The stock currently trading below the flat line, around 0.5% lower at around 110. Time to shift focus then to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com now joins us to talk about a stock that he's tracking very closely.
Bharat Electronics still holds good value. Stock corrected recently, and possibly with the inclusion of BEL in the Nifty 50 in the coming months, we think there is higher possibility of re-rating of the stock. The company has a healthy order backlog of rupees 76,000 crore, providing strong revenue visibility for the next 3 years. During fiscal 24, the company backed order worth rupees 35,000 crore as against its own guidance of 20,000 crore. In the current fiscal as well, the company is expecting order inflows of close to 25,000 crore, which is of course excluding LRSM orders, which could be much bigger. Moreover, execution is quite good in Q1. It delivered close to 20% growth in revenue. In the current fiscal, it is expecting to deliver 20 to 25% growth, led by strong orders in hand and focus on export. In terms of EBITDA margins, it has guided to achieve 23 to 25% margins, led by better revenue mix. On the valuation front, stock is trading at 35 times its fiscal 26 estimated earnings, which is reasonable. More so, I think, in the light of earnings visibility supported by strong orders in hand and improving execution.
Okay, thanks for that, Jitendra. For the time being, though, we'll slip into a short break. Come back. We'll continue our focus on markets. Don't go anywhere.
Back with us here on Chartbusters. The markets continue to remain where they are, continuing in consolidation mode. The Nifty remains around that mark of 25,030, still around 50 odd points away from that record high level. Pull up the Nifty Bank as well, and that is going to be the index that you will have to watch out for in today's session as well, since it is the financial services expiry today, nearing that mark of 51,200 yet again, and it needs to sustain above those levels. The high of yesterday was around about 51,300 odd. So that is the index that you need to watch out for, both the Nifty Bank and the financial services index. Pull up a few stocks, and these Tata Group companies have been on a tear in the recent past, yesterday and today as well. Tata Investment is one of them. That's the top gainer on the small cap index. 8% higher now is Tata Investment, and that is also at the highest point of the day now, 8.5% higher, nearing that mark of 7,000. Pull up Tata Elxsi as well. It is continuing to build on those gains that it made yesterday. The stock was up around 10-11% in yesterday's trading session, up another 3.5% today, was up around 5.5% at one point. So nearing slightly off the day's high, but continuing to trade higher. And the third one that I wanted to point out is NIIT, and that is also continuing to build on from the upper circuit of 20% that it was locked in yesterday. Ramesh Damani, the veteran investor, has bought stake in the company. Promoters have also increased stake. 17% higher now. The stock is up for the 7th day running, nearing the mark of 180 is NIIT.
Well, that's right. You know, and a few stocks actually from the broader markets. PTC India Financial, just pull up that stock. It's up closer around 6%, moving on high volumes. And it's hard to keep the Sanjeev Goenka stocks out of the game. You know, today you have CESC that's up close to around 6%. So big up move is what we're seeing out there. Another one that's moved actually very, very well is Lakshmi Organics. I think they had an investor meet. A couple of notes is what I read earlier today. And that one, in fact, has moved from strength to strength. Actually, just let's pull up a last 5-day chart of Lakshmi Organic. That one has done quite well. The chart should come up for you on the screen, which will tell you the kind of move that we've seen on Lakshmi Organics as well. Another one buzzing on trade on rather high volumes. For the time being, though, we'll wrap up on this edition of Chartbusters. Stay with us. Trading Hour comes up next.